Hi, you might be a customer or you would be the someone who follows banks very regularly. Even if you are someone who has already taken a loan from any digital company, or maybe you are a probable customer, you might have heard there is a lot noise coming around digital lending guidelines. So today we are here to understand what is these digital lending guidelines and how it may impact you. So RBI wants that the disbursal and collection process should be very streamlined and the disbursal should directly happen into the customer's account from an NBFC or bank's account. Vis-a-vis, if the collection is happening, that has to happen in NBFC or bank's account from customer's account. That means there should not be any third party or pool account involved. Why it is important to understand? Because there has been instances wherein the lending was happening over a card. Sometimes the customer is not aware and he has taken a loan on a card, but when it comes to reconciliation, there was a lot of difficulty. Similarly, if the repayments have been made into a pool account and there is no clarity from the customer side, it was very difficult for customers also to prove that he has already made the payment, and there was a lot of reconciliation issue which was arising. Lots of disputes were piling on and that were going to RBI in such instances. That is why the RBI wants the disbursal and collections to be very strengthened, and it should happen in customer and NBFC's account only.
Now, the very unique and new thing which was covered during this new lending guideline was Key Facts Statement, which is KFS. Why KFS? Many of us, those whosoever have been a consumer sometimes, we never dare to read all those lengthy loan agreements which we sign with banks or NBFCs while taking the loan. These KFS would cover the crux of all your loan arrangements, like what would be the rate of interest, what would be the repayment mechanism, what is the total amount you are going to pay. In case you are defaulting, what are the recovery practices which a lender might use, and if in case you have any grievance and problem, to whom to reach out to. So with a crux of all these loan agreement part, it will be covered in KFS. So that is why RBI has guided all the lenders to cover and provide a KFS to the customers before the loan is being disbursed. So RBI has also mandated that all the loans, irrespective of any nature, has to be reported to bureaus. I'm sure that you know bureaus. So we have 4 bureaus in India: TransUnion, Civil, Equifax, Experian. So and the last one I'm missing the name, right? So the RBI has guided all the lenders to report all kind of products to these bureaus. So earlier the practice was that only bigger loans were being reported to these bureaus. By bigger loans, I mean it could be your home loan, it could be your personal loan, or maybe a credit card. But the smaller loans like buy now pay later loans, a credit line loans, sometimes were missing from the consumers bureau reporting. How it was impacting consumers? Sometimes if your data or maybe your documents have been compromised and someone else has taken a loan on your name, you might not be able to get it. You might not be able to understand or know it whether there is another loan which is on your name, because it is not being reported to bureau. Now the RBI has guided that these loans also should be reported to bureau. So one, if that kind of malpractices has happened or your data has been misused, probably you'll get to know at a very early stage. But how it may impact on the adverse side is that even if you're defaulting a small loan, that will get reported into bureau and that will impact your overall scoring. So we've been overhearing a lot about alternative data and alternative scoring in order to give credit to somebody. If you follow any digital lender or any such blogs, you might be hearing a lot about alternative data score. The digital lenders, they use this alternative data score to underwrite a customer, specifically for those who doesn't have a very strong credit record. By credit record, I mean you do not have a very strong bureau score. Bureau score could be your Civil score, your Equifax score, or your Experian score, something like that. In that case, digital lenders have had an edge wherein they were underwriting some of the new to credit customers basis this alternative scorings. These alternative scorings primarily are the data fetched from the mobile, which could be your transaction SMS, some other alternative data sources. Sometimes they were even going ahead and collecting some information from social media accounts through the APIs. Now, during this regulation, RBI has clearly barred these digital lenders to access such kind of alternative data. How it is going to impact to the borrower? So for borrower, it's really good because you always have the control over your personal data. If you want to share, you are allowed to share with the regulated entities as well as their digital lender agents. But if in case you do not want to share, RBI has instructed them that if the lending is happening through app, there must be an option to revoke your access from sharing. How it is going to impact to a lender? So for digital lenders, specifically those who are doing it a lot for new to credit और जो कि खाली इसी डेटा को एक्सेस करके अपने कस्टमर्स को अंडरराइट कर रहे थे, for them it is definitely going to be a challenge and they will have to find an alternative way to underwrite their consumers now.
Download the app now.